Yo, yo! Quick round of applause for me making a video on Friday. No, I'm just joking. Alright, yo, what's going on, everyone? Welcome back to another video. Today's video is going to be on how to add on to your entries. I had a quick little request on this specific video, and I was planning on making it anyways, but yeah. So let's get straight into this. So first things first. By now, you guys should all know how to find your entries, how to find those nice sniper entries. And obviously, you're gonna be finding those on the smaller time, you're gonna be finding those sniper entries on the smaller time frames after you did your analysis on the higher time frames. So let's actually understand the concept of orders and how they're picked up and how they get picked up and activated. Higher time frame orders versus smaller time frame orders. So let's go up here and let's type in HTF for higher time frame. Make this like, I don't know, like 40 background, boom. And then let's just make one called LTF for lower time frame. So what's the difference between higher time frame and lower time frame? Obviously the higher time frame is just a more long-term picture of things. It's more of a bigger, just a long-term higher picture of what's happening. For example, one 4H candle is 4 hours worth of price action, and one 1 minute candle is just 1 minute worth of price action. So what is the higher time frame candle gonna tell you that the 1 minute isn't gonna tell you? Well, the higher time frame candle, that 4 hour candle that we're looking at, that's gonna tell you what happened within those 4 hours, what happened on the bigger picture, where the order is bullish, where the order is bearish, what was happening. Now obviously we're not gonna take trades based off of just because there's one big bearish candle engulfing and there's one big bullish candle. That's not what we're doing, but rather we're just understanding and analyzing the candles by themselves and taking a look at what's happening inside of price action. So for example, if I have a higher time frame POI, let's say I'm taking a sell, right? Say I'm taking a sell, I'm trying to sell as soon as price comes in here. So as soon as price comes in here, do I sell right away? Obviously not. What this big move up tells me is that all of these candles that happened on the higher time frame, these were bigger orders, meaning mass amounts of buy orders that were being pushed up. Buy side orders were being created, picked up, and influenced to go up, because obviously we're moving bullish. As soon as we come into this point of interest, let's assume that it's a correct POI, price goes down just like this. What does that tell you? Well, that means that the higher time frame orders now are shifting from bullish down to bearish. Now what's the difference between a 1 minute POI and a 4 hour POI? Well, the difference is going to be that this higher time frame POI, imagine this is the smaller time frame now. Once we do see price come into this POI, you're going to see a lot of stuff like this. You're going to see a lot of stuff like this. You're going to see all this consolidation. That's because all of this is smaller time frame orders. The smaller time frame orders are made to manipulate you. Think about it. Why does TradingView have the 1 minute time frame? You think the TradingView has the 1 minute time frame just to show us like, oh, TrackFX and his students want to trade the 1 minute for scalps, so we're gonna have this. No, everything is a manipulation trap. Just let that sink in your mind. The reason TradingView has the 1 minute, the 1 second, the 15 second is because it's basically trying to influence you into taking where's my thing? It's basically trying to influence you into taking trades on the smaller time frame to influence people to trade those smaller time frames and create liquidity. Because think about this, if I'm on the 1 minute time frame right now, let's go to the 5 minute, and I see this move up right here, you really think that the banks are buying this big move up? No, that smaller time frame orders pushing price up. But what's the higher time frame saying right now? On the 1 hour time frame, the higher time frame is saying nothing. It's consolidating. That's what basically the smaller time frames are here to manipulate you. The higher time frame tells us that these orders right here, there's no buy orders, there's no sell orders. It's all just equilibrium. Equilibrium meaning that buyers and sellers are equal right now. But what else does that tell us institutional traders? That tells us that there's liquidity resting at the high and the low, and most likely we're going to take out the liquidity and then reverse towards the upside. So that's just understanding the orders. So another example right here, price generated a lot of liquidity, whatever, and right here, so basically we see that the market goes down, creates this low. We created this wick low on the 1 hour time frame, and then this 1 hour time frame low gets taken out with this new wick. As soon as we went below this low and made a new wick, price pushes towards the upside, and look at that immense bullish pressure. Man, I hate when that happens. I don't know, TradingView is something else today. TradingView is annoying, man. probably just edit this out, but let's go back to USD/JPY. Was I right here? Nah, I was like over here. USD/JPY, and then boom. All right, boom. So I think I was like right over here or something. Yeah. So on the 4-hour time frame, we can see that this move right here, it was bearish. Buyers push price up to here at this high, but then the bears push price all the way back down. Why did they do that? Well, because the higher time frame orders are still being generated. This means that we're in an accumulation phase. These orders are still getting picked up. When there's no price action, price is dead, like just like this over here. That means that buy side orders are getting picked up and it's getting ready to make that major move up. But now think about this. On the smaller time frames, let's go to the 1 minute right here. 1 minute traders, they're not going to be understanding that this is just all accumulation, distribution, whatever. What they're going to be seeing is, oh, price is going down. Okay, sure, I'll take a sell right now because I see a big move down. And what ends up happening, well, maybe this goes your way, who knows, but like, because this is extremely like random, right? So and then boom, you get stopped out. It goes your way and then you get stopped out, and then you say, okay, you know what, I'll take a buy now because USD/JPY is going bullish. Target the next high, stop loss like down here. Let me take the buy. And then look what ends up happening. And then you get stopped out. And then people say, okay, you know what, I got stopped out for the buy, I'll take the sell. You take the sell, you get stopped out. The 1 minute are smaller time frame orders that are basically just nothing. Think of the smaller time frame structure as nothing. It has nothing to do with the 4-hour time frame structure. Nothing at all. The only time we're looking at the 1 minute time frame, the 5 minute, the 15 minute is one, when we're looking for scalp, and two, when we're looking for a really nice entry. So let me go back to the point I was trying to make. I think price action was over here. Nah, price action was over. See, like, I hate when TradingView does this stuff because now I have to refine my the example I was gonna show. It was a perfect example. Alright, I found it. Alright, perfect. Yeah, I found it right here. So let me go back in time just over here. So now that we understand what the 4-hour time frame orders are, what the the 1 hour time frame orders are, what the 15 minute, the smaller time frames order are, let's do our analysis. Now, just off of looking at this, I wouldn't really be looking to, I'd be looking to buy, but not really, because this was a pretty prestigious down move that broke structure, and in reality, we'd be looking to sell over here, right? So due to that, we wouldn't be taking, buy side opportunities right away. We need more price action to form. So for example, right now with this information, it's nothing really interesting. I can't assume that price is going to come here or here. What I need to see is price move away and show me more price action. For example, if I see price move away, consolidate, and then I see there's liquidity here, then I know most likely price is going to go back down to tap into an order block, and then it's going to go up. But with just this move up right here, this isn't enough to tell me anything. So this is why we wait. And now I can see that the market is consolidating after it tapped into an institutional candle right here. As we tapped into that IC, what this tells me is that price is most likely going to go back down to come back and retest maybe an IC over here or an IC over here, because long term we know the market has to go back up to come up here and retest, because we broke structure right here, right? And usually we're looking to sell at the areas that break structure. So I know that most likely price is going to be coming back down. So let me play this out quick time, and boom. What do you see? Well, look, you see that from an institutional market cycle perspective, we can see a major move up, right? Followed by a manipulation move right here. We see this red zone where the market created liquidity, and that was followed by a move down to sweep liquidity. So basically 2 manipulation zones. I'll just make this purple just for the sake of it, or pink, whatever. So boom, we do that, and price breaks out of this institutional candle, which basically tells me that most likely price is going to be reacting off of this institutional candle right here. Now, we understand why I was focusing on this one, right? Let me take my fib, mark it from the low to the high, and let's just look at our no fib levels. Is this discounted? Yes, it's in the blue zone. It's discounted, right? So it's a discounted point of interest. Price tapped into it, and let's just assume we went down to the smaller time frame, and this is when the smaller time frame is important. As soon as price taps in here, this is when we go down to the smaller time frame and look for that nice structure. So let me go down to the 15 minute or the 5 minute. So as price goes up, let's just assume that, there's probably a lower high over here. I'm not trying to go down to the 1 minute because I think it's going to reset my trading view. But let's just assume that the market created a nice lower high here and then a lower low. We've seen that there's a break of structure, and then price comes back down here. Now, one thing you're going to notice is that there's always going to be an institutional candle at the area that broke structure. So for example, price finished its move down, created this institutional candle, and then it went up and broke structure. Price comes back into it, but what does it do? It consolidates. As soon as the market comes down, it consolidates to do what? To pick up more orders, because this is where the banks are getting involved. The banks sold over here and they bought over here. So they sold and bought at the same time. That pushes price back up. Now their buys are in profit, but the sell that they had over here is still in a loss. So what they have to do is they bring price back down to mitigate that sell, and then they add on to their buy positions over here, and that's why the price consolidates and then it goes up. So for example, we get our entry filled. Let's go down to the 1 hour. I swear to God if I'm not recording. I thank God. Basically, like the other week I recorded like 2 hours worth of videos and I wasn't recording, so it's a pretty bad week. But yeah, let's just assume stop loss is at the low and take profit. Let's just put it at the high right here. Now let me delete this, delete this, delete this, delete this, and let's target the next high, which is all the way over here. Now we found the entry, and obviously we know, because this is hindsight, it's gonna go our way. But how do I add on to this position? Do I just spam the buy button because price is in my point of interest? Yeah, if you have billions of dollars like Trump, borrow a loan of $1 million and go for it. But nah, we don't have that type of money over here. You cannot just spam the buy button or the sell button. Like, trust me, I've done it before. It does not work out. It isn't smart. It's basically gambling at that point, and I do not influence any of you guys to do that, please, or girls. I don't expect any of you guys to do that. Don't just spam the buy button over here because price isn't a point of interest, because we don't have confirmation. Instead, what we're gonna do is we're gonna wait for price to go into profit. As soon as it goes into profit, we're gonna do the same exact thing. We're gonna monitor the higher time frame orders and wait for price action to form, just like we did over here. As soon as the market created this zone of liquidity, we knew that the market is gonna come back down and then go up to take out the highs that rest right over here. And boom, liquidity top. Now we know that the price has to go back up to take out these highs, right? And that's because we waited. So it's the same concept. As soon as we're in this trade, all we have to do at this point is just wait for price action. Now right here, we saw the market took liquidity of the highs and it broke structure right here. It gave us a nice continuation of structure. Broke this new high and made a new high. What does that indicate to you? That indicates that price is now moving bullish. Now, same exact thing. If I want to add on to my position, how do I do it? Well, look for that institutional candle that created that break of structure. Right over here, we can see that this institutional candle did exactly that. This IC right here created a clean break of continuation of structure. It's at the bottom. It's discounted. Obviously. Make this the IC, make this yellow, and boom. So we know price needs to come back down. Well, it doesn't need to, but it's most likely going to come back down, come into here, because this is where the banks last sold and then bought at the same time. So they have to go back down, close the sell, and then push price back up. Now this is where we'd be looking to add on to our position. Remember, we're not looking to buy just because price is in one point of interest. We need to move from point of interest to point of interest. So let me move this up to the next high and let's see what ends up happening. And price comes in here. All right, give me a quick sec. My mom's yelling at me. I'll be right back, guys.